Hey everybody, Marty Mazzora, good morning. I'm going to give you a quick lesson today on the market, and I'm going to title this one Short Covering. There was unexpected news out of Europe that forced the market higher. As I speak, the Dow is up something like 220 points, which is great and very welcome. I have continued to maintain that stocks are underpriced, fundamentally speaking. And there's tons of cash on the sidelines. Interest rates are very low, so don't be surprised by these extremely big spikes in the market. But I thought I'd give you just a real quick lesson and talk about what might be behind these. I think it was up 200 at the open this morning. So what would be behind these big spikes? What inspires that, other than just people coming in and buying because they think they're going to make a lot of money in the market longer term, and that these prices are real good. And I want to talk about short covering today because for every good headline, every headline that says, wow, this is the silver bullet, there's going to be 10 that say, you got to be kidding. This is throwing money at problems created by throwing money at problems. Now, I've written a lot about Europe. If you haven't read the blog, just go to the archives if you want my insight in terms of what's going on over there. And I don't want to do that here. I just want to talk about the mechanics of these big moves. And this could happen in the other direction, but that would be another scenario. So anyway, a lot of negativity out there. I'm going to create a hypothetical investor. I'm going to call him Jimmy, which, by the way, happens to be the first name of a gentleman who was out there this morning saying, there's no way, this is a joke, the Armageddon's are coming in Europe. But Jimmy, admittedly, is betting big time on that scenario. So he is doing what you call shorting stocks. And let's just take hypothetical company XYZ, and shorting, by the way, is where he goes to his broker and he borrows some shares. Now, Jimmy's got a lot of money, so he borrows 1 million shares from someone else who allows it of XYZ and puts it into his, we'll call it his short account, and immediately sells it at $10 a share. And so Jimmy is sitting on a pile of money, $10 million, to be used to one day replace that million shares of XYZ. Now, Jimmy was expecting XYZ to fall. He was expecting to one day wake up and then buy back, not sell, buy that million shares of XYZ. Remember, he's got $10 million to spend at 8. Give the million shares back to its rightful owner and keep $2 million in the process. Remember, he sold the shares for 10, has to be used to replace the XYZ. He does that, covers his short, replaces it, $2 million that he can take home. Great way to make money if you're right. Okay, but here's the problem. Today, just at least for the moment, Jimmy is not right. Jimmy is wrong. And remember, now he's out there required to replace that 1 million shares. He's got that $10 million in his account. He owes somebody 1 million shares of XYZ, and today he wakes up to a $12 price. Now, he's done the fundamental analysis, and he realizes that XYZ normally trades on a price-to-earnings basis of, say, 16 times earnings, and it was trading at, say, 10 when he bought it. But he was counting on the pessimism and short-term volatility to make it even cheaper. But it went the other direction now. And then he says to himself, my gosh, if it were trading just at the normal PE, it would be like $16 or $17 per share. And so he realizes that, my gosh, if I'm wrong, I'm going to get killed, so I'm going to get out. So he covers his short. So he buys 1 million shares back at $12 per share. Well, that's $12 million that he needs. So he has to take out of his pocket, throw in another $2 million to cover that short position, which leaves him with a loss of $2 million. Which, when there's a short squeeze, meaning in the shorts who, if this was a heavily shorted stock and everybody's panicking at the same time, as you can imagine, all that buying to cover those positions in the market, the way the auction works, as I've illustrated here before, what's that going to do? Well, that's going to push stock prices higher. So when there appears to be a substantial amount of short interest in the market, and I haven't actually looked at the numbers, I'm just assuming that because I know there was a lot of pessimism around this European summit. I'm sure there's a lot of shorts out there. In fact, I know there are, just by reading commentaries. Those people just got it handed to them, and it forces a lot of that spike. So, given how we've gotten to this place, I'm presuming that this is more or less a short covering rally. Now, folks, as I keep saying, stocks are very attractive, fundamentally speaking. I looked at the PE day before yesterday of the S&P 500. It's like 12.9, and we're talking about an index that tends to trade, 15 plus before we even begin to think it's overvalued. Things are cheap because of all the fear and all the news and all the people like Jimmy who are talking prices down. So you gotta remember, as you look at the headlines, as you watch CNBC and Bloomberg or wherever you get your financial information, those people, you gotta remember, the people that are bullish are long the market. They think it's going up. The people that are bearish are short the market. And when the market doesn't accommodate their position, they tend to scream louder and louder. You don't succumb to any of it. You have an allocation that's consistent. If you're a client, you have an allocation that's consistent with your temperament and your time horizon, and you rebalance, which means if we did your review recently and over the next 6 months this were to continue, you're going to be overweight stocks and we're going to sell while everybody's feeling euphoric, if you will. If Jimmy's right, stocks go the other way, then 6 months from now when we get back together, we will be buying while everyone else is selling. And at the margin, we'll do some things with sectors like we do, et cetera. So, folks, I will leave it there. I hope you have a wonderful weekend. I hope this little lesson was informative to you. My aim with this stuff is not to get you keep thinking short term, but to keep you from thinking short term, but to understand what the headlines mean and what's going on in the media, and keeping you out of the fray, if you will. Have a great day. Thanks. Take care. Bye-bye.